Welcome to the Impact Diaries by Liaison Group. This is episode 3, and my name is Dennis Karanja, General Manager for Regional Business at Liaison Group. And today we'll be discussing sustainability in the insurance sector in Kenya. And today you're going to be joined by a colleague in the industry from the Association of Kenya Insurers, and I'll allow him to introduce himself.
Hello, my name is Kiama William from the Association of Kenya Insurers. I am the manager in charge of general insurance business. Sustainability insurance is a new area that we are going in to look into. What we are looking at here, Dennis, is looking at how can we have development, but at the same time, how do we mitigate the negative effects of to the environment and to our people? The damage to the environment, what we are referring to here is the damage to the environment. Most of the things that we are doing, we are polluting the environment. For example, the carbon emissions, the kind of emissions that we are having into the environment. That is what we are saying. We need to mitigate those risks in terms of making sure that we do not spoil the environment for our future generation. We are also looking at how do we make sure that the people that we have, for example, the society, we are having an impact to the society, positive impact to the society. Looking at also, for example, the people that we are employing, are we able to cater for them properly? Our society, the weak links in the society, what are we doing in terms of insurance to help them, or what are we doing to protect them from the shocks of the environment?
Sustainability in the insurance industry cannot be about ticking boxes. It cannot be about compliance. It has to be embedded in each and every process that we have, all the way from underwriting, pricing, and also risk management practices. We have to really consider sustainability and make sure that we are well aligned so that we can be able to create an impact in the society and actually help the society build resilience in case of those extreme events that threaten our sustainability.
Insurance have a big role to play in terms of pushing the sustainability agenda. As you have mentioned, Dennis, we have when we are talking about underwriting, what kind of products are we offering to our people? Are we looking at those people who have products that are encouraging protection of the environment? Are we able to give them some credits in terms of, for example, are we able to give some discounts for people who are able to protect the environment? Protection of the environment, we are doing this for our future generation, to make sure that our future generation does not suffer from what we are doing today. Today we might be doing some things that will cause problems in the future, and this is basically what we are looking for. In insurance, sustainability goes beyond underwriting and claims payment, because we also need to look at investment. What kind of products are we offering in the market to make sure that they are sustainable and they are not causing harm to our environment? So I think there's a combined host of issues relating to sustainability in the insurance sector.
Yeah, in terms of products in the insurance industry in Kenya that have been seen to promote sustainability, there are quite several, although sustainability is still new. Like we have the weather index-based insurance for crops and also for livestock. So you find that we are able to use technology to be able to cover risks that would have been difficult to cover. For example, a risk that is in a very far away region, whereby it would be difficult for risk professionals to conduct risk surveys, for claims to be assessed. Then we use indices to be able to pay claims. For example, if there is reduced rainfall in a certain region and it's under the index-based insurance, you find that the insurance company is going to make a payout based on that alone. So that is really helping us to gain sustainability right now in the Kenyan insurance industry.
Maybe we could looking at the premiums that people are charging, that the insurance companies are charging. Insurance premiums are scientifically determined. However, we have various methods that we can look at to make sure that we have sustainable. We provide access. Everybody is able to access the insurance that we are looking for. For example, when you look at micro insurance products, for example, the way the products are arranged, they are priced. This is just trying to make sure that these products are accessible to even to the poor, and that is being socially responsible for the insurance companies. So we have a number of products that we have seen in the market that are sensitive to that level, to that lower cadre, and those are the ones that we are referring to as micro insurance products. So when you look at things like SHA, for example, if it is able to provide the services that it was meant to provide, that is a classical example of what we would call a product that is looking at for the poor paying for the rich. The insurance should also have that kind of an arrangement where the micro insurance products are priced in a way that those people in the lower pyramid are able to access.
Yes, and in addition, William, you've mentioned that insurance pricing is actually scientific, and using that approach, there is also what we call risk-based affordability, whereby for certain sectors we are able to do a risk analysis, and if you find that the practices there deserve better premium, you are able to actually discount the premiums for that sector. So you see, what you do is that you directly impact on sustainability because you are promoting the best practices in such kind of industries. So I think that helps, and it also helps with apart from affordability, it helps with making sure that profitability has been captured.
Well, nobody should be left behind in terms of when we're trying to move forward in this journey of sustainability. And I think how we navigate through is very, very important in terms of how do we make sure that people are coming on board to walk this journey. So what I think what would help most is for example, are we trying to encourage in terms of giving some BOGA points to people who have products who are promoting that kind of practice? Are we able to bring on board products as an industry? Are we able to develop products that are friendly to the environment? And if we have a team doing that, then we should see how do we promote them from where they are to the next level, so that we encourage development of those kind of products in the industry.
Yes, and I think for transition, insurance brokers have a very critical role in terms of training to the public what is sustainability, what is ESG, how does it impact all of us. So I think insurance brokers will have a very serious role there. And in terms of communication, that needs to be part of the whole process so that every member knows what is happening on the other side.
Even at the association level, we have actually started making sure that we walk the talk. So what we have done is we started with the training. Then we thought we would train the managers in terms of how to develop sustainable products, or how do we incorporate ESG in our activities. But then we found that if we don't have the tone at the top, then that would not be right. So what we did, we started with training the CEOs. Now we are going down to training the managers this year. Early this year, we have a training coming up for the managers. So it is a process, it's a continuous process that we are engaging in.
There needs to be a balance in terms of profitability and what we're looking at when you're talking about sustainability. So the balance means that you need to walk through the journey with the client. For example, you have these two companies where one is having very good practices. The SOPs are clear. For example, waste management is clear. And you have another one that is doing the opposite. So I think at Liaison, we do have a risk management department whereby clients are taken through a very elaborate risk management process whereby their risk profile can improve. Once it improves, the insurance company is able to charge a fair premium for that risk. And you see that way now sustainability has been impacted by encouraging those good practices.
Yeah, I think that's why we are actually in underwriting, is why we are encouraging our customers to, and our insurers to conduct surveys for these risks. Previously, people thought like when you do a survey report, it is like you are increasing the cost to the customer, but that is not correct. What is correct is when you do these surveys, then they're able to come up with survey recommendations, and once those survey recommendations are implemented, then the risk improves. So you're able to check, is this person now moving into operations that are improving the environment, or is he mitigating the poor effects that the industry, for example, is having on the environment? So once you see that those risk recommendations are implemented, then you're able to give discounts in terms of premiums. We have seen quite a good number of products that are responding. For example, parametric insurance is now here to stay, where we're just using data from the meteorology department, as Dennis, as you had spoken about it, Dennis, that the meteorological department, we get data. Have we seen? Are we at this level? So there's certain levels that we are able to identify, and then you're able to say if the drought is at this level, the payout will be 50%. If then it increases to be heavier drought, then we say the payment will be 80%. And it will come a time then when we'll say we'll pay 100% where there have been no production. So we've seen quite a good number of products in that area, and we have also seen the partnership that we have had with the government in terms of the agriculture and livestock insurance programs that have been there sponsored by the government. So when the government comes in to sponsor those products, with just being socially responsible, so we're seeing the products and the prices for those products go down. The government comes in to make part payment of the premium, and then the members of the public will pay the difference. So it's making it life easier for the general public.
In addition, we're also seeing some products whereby an insurance product also includes risk management services inbuilt. So you find a product like cybercrime right now, it has an element of monitoring, crisis response services, whereby insurance companies are not only selling products and then waiting to pay claims. So they become part of risk management so that overall the risk profile of our clientele actually reduces. And the effect is that premium becomes affordable in time, and also insurance companies are able to remain viable. Insurers, and actually when I say insurers, I mean the entire insurance industry. There has to be a change because of the changes in, for example, in climatic conditions. You see, before it was possible to predict some weather patterns. Right now, the frequency and the severity is so different to an extent that if you rely on the historical data, the way insurance has done it before, then on its own is not sufficient. So what we are doing is adopting new techniques like forward-looking methods of being able to tell what might happen later in the year, what might happen next year. There are cycles of extreme conditions that are to be expected. You see, using that and using the current technology, you are able to combine the traditional way of historical data with the more forward-looking and be able to have a model that can actually respond to the current needs.
Yeah, and I think using data and statistics is a very key point that you have brought out, because when you use statistics for example in terms of pricing, then you're able to give the customer what is correct, what is right for them, rather than the traditional way of trying to say this risk we price it at this rate. But when you're now using statistics and the data that you've got and the current technology, you're able to determine now the correct premiums. It would be unfair, or it would be unfair for you to just say, for example, a motor vehicle, we are charging a rate of 5%. Where do you come from the 5%? And yet you have not you tried to check my driving habits. So using technology, then we are able to come up with a fair price to the person, rather than making them feel like no, you're being overcharged for the mistake of another person.
And I agree to that because we have also seen products that are driven by behavior. Like there's a product in the market whereby they use telematics to assess the behavior of a driver when they're driving a motor vehicle. So like William, you've said, it helps us charge a fair premium and a different premium from one driver to another.
The insurance sector needs to have good data in their custody, and one way of doing that is capturing the data maybe at a central point, like for example, like what we have done under Moto. We have a central data repository at the association. The other classes of business, we may not have a lot of data in terms of the other classes of business. And I think that is now the route that we need to start going into, so then we are able to process it and make sure that we are guided by the numbers, rather than the general rule of thumb.
Yes, and in terms of data, apart from the industry sharing data amongst ourselves or having a centralized system, we're also lacking data in terms of risk management, whereby you find that there lacks cooperation with government entities to be able to find data that would be helpful in terms of risk modeling. So I think partnerships are required with other players in the country. Talk about the meteorological department and all these other departments, the NTSA. I like what Aki did with NTSA on the motor insurance. I think it should be encouraged that that can be done even for other products in the market.
And it's also very, very important, as you have said, to have accurate data. For example, when you look at data that we get from other agencies, sometimes you feel like the data is not very accurate, and that has an effect in terms of the results that you'll get. But it's very, very important to have accurate data. Well, partnerships are very, very important in terms of when you come to the insurance sector. We've seen, for example, when you look at the Malaysian market, there's a study that we did, and it showed that partnerships, for example, especially when you are handling micro insurance products, if you don't have partners, then you're done. But if you've got these microfinance institutions, you have got these for example, agricultural products distributors, all those kind of entities, you are able then to distribute the micro insurance properly. So there's need to look at the microfinance, mainly the microfinance institutions, okay, even the finance institutions themselves, the banks, all those kind of partnerships, I think would be very, very vital when we're handling this type of insurance, especially the micro insurance bit. What do you think?
Yeah, I couldn't agree more. And also, I think what you can also mention is government. Government can play a very huge role in terms of sensitization to the general public, and using, government is everywhere. So when you talk about micro insurance, you can actually really benefit a lot in terms of collaboration with government educating citizens about the need for sustainability, the need to be insured, and the need to manage risks. Yes, the government has really done a lot in terms of trying to bridge the gap when you talk about the uninsured population. Like Mr. Kiama mentioned about the SHA, whereby the insurance being provided by SHA is heavily subsidized. And you find that someone who would not have afforded is able to afford some form of insurance. And if you look at other sectors like livestock, there are programs that government has involved itself in. So government comes in, they help us with the data. Then they also subsidize so that farmers out there are able to afford the insurance. Government has also been helpful in terms of allowing partners from abroad, local partners, to be able to come in and support the insurance industry. So when it comes to also regulation, IRA, I would say, has been supportive also. There are programs like what you call the DRIVE program that is in several countries in Africa, but you see, IRA has to really allow the product to sell. And once that happens, you find that a very huge population is able to access insurance services in the country.
I'll beg to differ a bit, Dennis. When you say the government has done a lot, the government has a lot to do, because when you look at the programs that we have, for example, in agriculture, they are in some few countries. So we need to bring in more countries into this program. So then we can say then the government has done marvelous. But to this the score of having done very well, that one I beg to.
It's not a lot. There's more to be done. Okay. Digitalization, I would say, is at the center of sustainability and at the center of making sure that insurance penetration in Kenya goes beyond what we have. So you find that for a product, for example, I'll give an example with the Liaison online product that we have. You know, sustainability is about inclusivity. So you find that someone from any corner of the country is able to access services from Liaison Group all the way in Nairobi. And so it removes that kind of discrimination that was there before, whereby you have to travel to the next town, try and shop around different insurance companies. Here you are able to find all insurance companies in one portal, and then you make your choice. Still talking about digital tools, they have really enhanced service delivery, like what Aki did some years back with the motor insurance, whereby someone does not need to travel all the way to Nairobi to get a motor certificate. So you find that someone is able to get a certificate on their phone via WhatsApp, and they are insured. So service delivery, and also when you look at claims, some companies have already started using AI to verify claims. And you see what that means is that the claims that are not genuine will be picked very fast, but the ones that are genuine will actually be settled at a faster rate than it would have taken before, when AI was not being used in our industry right now. So I would say digitalization has really made a serious impact to us.
And that is true, because I've seen also the growth of so many insurtechs currently coming up, and now using technology in terms of product distribution, not only motor. We're seeing that field growing in our market. And what we have also done at the association, we also have what we call the Bima Yangu app, where you are able to report claims directly to your insurance company, and you are also using AI. You are able to upload the photos and upload everything in the system, and then some of them are able to do even assessment of the motor vehicle, rather than the traditional way of having an assessor go to see the vehicle. Then you're able to make an assessment. Even at the company level, you're able to see this kind of damage. I don't need to employ another assessor that I'm going to pay, because I can see the damage is XYZ, and then you are just able to authorize repairs at a go. So I think AI is being used in one way or the other by most of the companies. There are many opportunities that are coming up, and I think we need to be on the lookout. For example, we have the coming in of electric vehicles. For example, people are shying away from insuring the electric vehicles, but now you have seen, by and large, people understanding that these vehicles are environmental friendly and they are not causing a lot of damage like the diesel vehicles to the environment. So people are able to now price them lower than they were taking before. So I think the key thing that we need to do is a lot of education in that area, to tell people, for people to identify the opportunities that are coming up. There are other things that we are calling green building.
I saw an article from a research and development team where they were talking about insurance penetration in Africa, and it is said to be on average below 3%. In developed economies, it's about 7% and above. So when you talk about opportunities in the insurance industry and connecting that with sustainability, I would also agree with William that there are huge opportunities out there. There are so many projects that are coming up that are driven along the sustainability agenda. So you'll find like what William has mentioned about electric cars, and also their energy efficient buildings. So you find that some insurance companies will shy away from that kind of a risk because they don't understand the risk 100%. But you see, the ones that are able to adapt, the ones that will adapt will actually be in a better position to survive as risks keep evolving every day. Also, I would add that there are also many partnerships that are ongoing. You see, this sustainability agenda means that there are NGOs, there are government entities that are looking for partnerships in terms of engaging on sustainability. So insurance companies that place themselves well will be able to be part of the discussion, because in that discussion, there requires to be an expert on risk management, an expert on insurance. So I think insurance industry as a whole has to play their role in terms of sustainability by making sure that they support that agenda by helping to manage risks that come with this new way of doing things.
We have seen a number of players in the market who have taken bold steps in terms of making sure that they incorporate sustainability in their activities. We have seen others. We have seen they have not yet started moving, but we need to start from somewhere, and we would encourage every member or every insurance company to make the bold step and start moving on that direction. One way of doing this is, for example, the Nairobi Declaration, signing the Nairobi Declaration. We have quite a good number of companies who have signed the Nairobi Declaration, and this is the first bold step to say we want to support sustainability in insurance, and having done that, the senior management now, training comes in handy for them for the managers also to see which route where are they going to start in terms of incorporating ESG issues into their activities.
I would say that sustainability is a really big thing right now in the insurance industry. Everyone is talking about it, but we have to take the conversation from talking about it out there in our meetings to actually making it work, practical solutions. Again, referring from an article from a research team, is that in Africa, 85% of disaster-related losses are actually uninsured. And that's why you'll find in the news people complaining after floods, after huge fire incidences, bushfires. There are so many complaints in Africa about people having made losses and they don't know how to bounce back. So what we need to do is actually have practical steps and ensure that we look into inclusivity as we look at the sustainability agenda.
And as I had mentioned earlier, Dennis, we have, at the association level, we have actually started moving the agenda. And I did mention that we had a very, very good training for the CEOs that we did. We're now moving in now to the level of managers, and thereafter we'll make sure that everybody gets to start from somewhere, from wherever they will start, but everybody starts something in relation to ESG.